Hello everyone, welcome to my channel. I hope you all are doing well. In this video, we'll discuss about accounting. This video is about basic of accounting. Here we'll understand need of accounting, definition of accounting and objectives of accounting. Basically, this video is for the students who are opting for commerce in 11th standard, and it can be used by the students of the like BCom or BBA students, or can be used by the MBA students also, because they have financial accounting subjects, so it can be used by those students also. So let's begin the video. First is need of accounting. First is business. In business, the businessman invests capital, or the business is started with the capital. Okay. Then it makes some transactions. It can be like buying and selling of goods, then payment of expenses and some expense and some income. Okay, so there are some transactions, buying and selling of goods, you can understand very well. Payment of expenses, it can be like rent paid, wages paid, salary paid, it can be that transaction. Then income, it can be some income, it can be like rent received. Here rent received, sometimes company businessman receive some rent, or commission received, or interest received. So this can be some form of income that in business can be received. Then the company is having some asset like land, building, then machinery, or furniture, equipments, and at the same time it has some liabilities. Liabilities can be like loan. Okay, then you have creditors. When you purchase goods on credit, then you have creditors. So this is ultimately these are the transactions, these are the transaction companies making, and this is the assets and liabilities in a business, of a business or of any company. Okay, now it's very difficult for any businessman to remember all these transactions thoroughly. They have to record somewhere in a so that it can be recorded in a systematic way. Okay, so that's why they record all the transaction. But ultimate goal of this is that to identify whether we are in profit or in the loss. Whatever amount I have invested as capital in my business, and I made some transactions, it can be yearly basis, it can be daily basis, it can be monthly basis also. So I'm doing almost transactions, I have asset as well as liabilities. Okay, but after some time, if I want to see okay what I have done, then I'll see this profit and loss, and this profit and loss can be identified with all those transactions we made in this. Okay, so the definition of accounting is the art of identifying, recording, classifying, summarizing, and communicating transactions to the users and management for decision making. Okay, so what is identifying? Identifying means all those transactions, what buying, selling of goods, payment of bills, payment of wages, payment of salary, it can be these transactions. Once we identify the transaction, we record the transactions. So basically the transactions are recorded first in form of journal entries. Okay, here all the transactions are recorded irrespective to the nature of the account. Once we record the transactions, then we move to the classifying. Here we prepare the ledger. So what all transaction we pass in the journal entries. Now similar transaction we'll put in one head called as ledger. So it can be sales account, it can be purchase account, it can be salary account, it can be bank accounts, cash account, it can be like that. After preparing the ledger with the closing balance, we summarize the what is my closing balance of particular ledger. Okay, once we summarize, we prepare a trial balance, and after preparing the trial balance, we prepare the final account. So final account, here it is prepared trading and P&L account. Okay, so once we prepare the trading P&L account and balance sheet, we communicate the transactions to the user. Like what is a trading and P&L account, we are able to identify what is my profit and loss. Here we are able to identify my financial position. So this is being communicated to the user and management for the further decision. Next is objectives of accounting. First, it is systematic record of business. Systematic record means recording, classifying, summarizing, then communicating. So there is one step by step we are doing it. Okay, that is called systematic record of business transaction. Here the purpose is to identify profit and loss. Of course, when I said the businessman is doing business and doing all those transactions, so there is something ultimate goal that whatever transactions I did in all the year, in during the full year, what position I have, whether I am in profit condition or whether I am in loss condition. And this can be identified with the help of final account, where we make the trading and profit and loss account. With the help of this account, we are able to identify how much gross profit we earn and how much net profit or net loss we have. Gross profit or gross loss, or net profit or net loss. Next objective is to determine the financial position. Here, with the help of balance sheet, we are able to identify the financial position of the business, like what all asset company business is having and what all liabilities the business has to pay off. So this is being used by the investors, it is being used by the creditors, the balance sheet is being used by the creditors also. This being used by the like analysis financial position is used by the creditors, investors, bank also sometimes, investors, bank, and suppliers. So just to identify what is the actual financial position of the business. If the financial position looks sound, they'll provide money, they'll lend money, they'll give you loan to your business. If the business is not sound, then they will hesitate to provide sales on credit, and they will not provide loan. So this helps in financial position. Next is, like, this point is somehow related to this. We are able to determine the financial position with the help of balance sheet, what all assets and liabilities we have. Next point is linked. It is like information used by the creditors, investors, bank, to know what is the credit worthiness of the business. If the financial position of the business is sound, that means credit worthiness is there and they can proceed it. Next is to detect and prevent the error also. So business daily we are doing some transactions, so there are some chances for the errors also. So once we are recording systematically, then we are able to identify when any error is there, and same time we are able to identify the frauds if anyone has done. Okay, now next point is assess the management. So assess the management means this all account, as I said, assess the management, the past recording, the actions past recording will present, to keeping in mind what they want to achieve in future. So this way they help in assisting the management. So with the help of the past record, they take decision in the present to for the expected future. I hope you like my explanation. So if you have any doubt, you can please comment in the comment box. So see you in next video. Thank you.